This is Mohammed at MAH Chartered Accountants, and this video is all about research and development tax credits, otherwise known as R&D. The key benefit from R&D tax credits is that you get a massive cash refund or tax saving if you're involved in R&D. So if you have a company which is making a loss, you can get a cash refund of 1/3 of your investment. So if you spend £100,000 on R&D, then you can get £33,000 cash back from HMRC. On the other hand, if you're making a profit, how it works is that you get a tax saving of 43%. So again, using 100k investment, you know, your tax bill would go down by £43,000. So say if your tax bill is normally 50k, you know, your profits are around the 200k mark, you're basically not going to pay any tax because it will all be wiped out. So yeah, it's a really amazing tax break, and if you're involved in something new or some innovation, it's definitely worth looking into. Most of our clients are tech startups, but we've also done this for clients who are, in other sectors. So say for example, we have some clients who are in financial services, and they get quants guys to do research and make a mathematical model, some algorithms to help them with their trading. Should they buy the share, should they close a position, monitoring the market basically. We do some automatic trading, robo trading as well. So all that kind of thing is definitely advanced in science and technology because there's a mathematical model. There's uncertainty because it's it's so complicated. You don't know if you're gonna be able to succeed or not. So that would definitely be eligible for R&D. Also, one of our clients was a traditional business. It's all about sort of people and phone calls and that kind of thing, but they had to develop an internal software tool to help them monitor their performance and keep a track of everything, and just do a better job for their customers. And because they developed it in-house, it was fully bespoke. There was some new stuff there. Again, there's uncertainty, so they were able to claim R&D. But the majority of our clients are tech startups, and they're making a new app. They're having a new website, it's a new platform. For example, one of our clients is doing stuff with drones to and imaging. We have a number of clients. We've got marketplaces. One of our clients did live streaming. Got clients doing AI. Cryptocurrencies. There's all sorts. There's a wide range of activities that they're involved in. And some of the clients they're doing something really like sort of deep tech, like really sort of complicated AI, and they have to get big data sets and train their model, and there's a lot of complex algorithms involved. So kind of like deep tech. And then on the other hand, we've got clients who maybe they're putting a lot of different third-party tools together. They're using a third-party engine. They've got APIs and SDKs, and they're sort of putting stuff together. But it's the way they put it together. It hasn't been done before. So it still counts as something new. There may be functions and features which haven't been done before, or haven't been done in this vertical or this sector or in this way. Maybe the UI is different. So as long as there's something new, as long as there's some sort of advance in technology, you can claim R&D. And it doesn't have to be something that has never been done before. So for example, you could buy a product sometimes. Maybe you pay a company £100,000 for a license. Like for example, one of our clients is doing they've got a financial services platform. You could get white label, pay someone £100,000 for a license, and that's it, right? Or you can make it from scratch. So it's not new because someone has already made it and they're selling it via a license, but they own the IP. It's their proprietary sort of knowledge. It's not open source, so you're recreating it to save money basically, or maybe you want to do it better. So even if it's not completely new, as long as it's not open source, it still leads to an advance in science and technology. Um, so yeah, so kind of what I've been mentioning, just to recap, if you have an advance in technology or science, and if you have uncertainty, then your project will be is likely to be eligible for R&D. So the way it works is we sort of sit down with our clients and we talk about what they do. What projects were they involved in, um, why did they do it? Why couldn't they just um, get something off the shelf? Why did they have to make something themselves? What problems did they anticipate? What problems did they actually encounter? How did they overcome them? What sort of obstacles were there? And then once we know what's going on, we write a report so that we can tell HMRC, what you've done, and importantly, we go into a lot of detail about why your project is eligible. So far we've got 100% track record. We've never had a claim being rejected. Our biggest one actually was one of our clients spent £2 million on R&D, and they got a big fat refund of about 600, nearly £700,000. So it's a massive refund there. Although other clients to get refunds are like 5, 10, 20k. So we're flexible. We can work with all kinds of clients. So one of the big things is we write a report detailing the sort of technical narrative, explaining why your project is eligible. And then the other big part of what we do is we go through the expenses of the business and we determine what is eligible and what isn't. So we've spent a lot of time looking through the rules and regulations, and we know what is eligible, what isn't eligible. So the key things really are salaries, outsourced development, subcontractors, and software costs. Those are the key ones. So going a bit further, directors and co-founders, if they're pre-revenue, if it's a new business, a startup, a lot of the time will be spent on R&D, but not 100%, because they will be talking to investors, they'll be talking to potential customers, they'll be getting a team together, they'll be doing stuff that is not R&D. So they might be claiming like 50% of their time is spent on R&D. If you have a CTO or you have a full-time developer, their time might be 100% when you're pre-revenue, when you're pre-launch. Once you launch, it might drop down to like 80, 90, maybe 70%, depending on how much time they're spending on maintenance and bugs and fixing things. Sort of not doing new R&D. A lot of our clients fully outsource their development. They're using a company in India or Poland or maybe even in London as well, and they're outsourcing the whole thing. So HMRC want to promote sort of using in-house staff. So that's why if you outsource it, you can only claim back 65%, basically because HMRC are losing out on national insurance and tax, or maybe it's going overseas. So before, I mentioned if you spend 100k on R&D, you can claim £33,000 back if you're loss making. So if you're if you're outsourcing, that will be restricted to 65%. So 65% of 100k, say 65k, and then one further that is about say 22k. So you're kind of restricting it, but it's still definitely worth doing. You're claiming a big amount back. So you've got salaries, you've got outsourced development. The other big thing is software. Maybe you're using like tools like, I don't know, Atlassian, GitHub. I don't know. There's so many. Probably the Amazon, AWS server costs. And there's a lot of various software costs. We'd go through it, and some things like sort of purely marketing, those you probably can't claim. You can't claim back like, you know, certain monitoring tools. But a lot of things you can claim back. So just to sum up, you have an R&D project if you're involved in scientific or technological advance, and also there's uncertainty involved. We will sit down with you, think about how the project meets the criteria for HMRC. We'll write a report. We'll go through your costs, and we'll analyze all the expenses, find out what is eligible, what isn't eligible. We'll do the calculations, and then we'll put the report and the calculations together, and then we'll file this with HMRC, and typically it will take about 6 weeks to get your refund back. Sometimes clients are running out of money, so what we do is we end the year early. So rather than having a 12-month period, we say the company's accounts are for 6 months, and then we file the accounts and tax return early, and then the client gets a refund. So yeah, so that's it. So R&D is a really, really good tax break. Loads of different businesses can claim it, not just tech startups. And we'd love to help you to look into it more. So just drop us a line and we can set something up. Okay, thanks.